How's it going, everyone? My name is Derek Afasi. I'm the owner of Afasi Financial Group. Today's topic I want to discuss with you, what are the best annuity contracts out there for your specific situation? And that's very, very important to understand because where the problem lies is a lot of individuals, they'll go to a seminar or they'll go sit down with a financial advisor that is just pushing them one product, one solution, one strategy. And that's probably the worst thing that you could possibly do. And if we just go into the seminar example, what happens with a typical seminar, whenever you have an advisor that's basically sitting down and they might have something set up at a Ruth Chris or whatever that is, and they might have about 20 to 50 people at this specific seminar, and they say, okay, listen, based upon your retirement income, we're going to be talking about the different benefits of this specific annuity. Well, out of those 20 to 50 different people, the odds that all of them are going to have the same exact goals are slim to none. Now, the reason why I say that is because it's not all about necessarily the advisor. When you're doing with annuities, you have to make sure that the advisor knows what he's talking about. You have to make sure that the advisor has access to all the different carriers out there and has access to the top strategies possible so that you could get the most optimal benefit at the end of the day. An annuity product is nothing more than a financial tool. It's like an individual tool in a tool belt. It's like if you're if you're building a house and you need to hammer in a nail, sure, you could take the back of a screwdriver and use that as a hammer, but it's not going to be as efficient as using a physical hammer to hammer in that nail. So the whole point that I'm trying to make is you have so many different options to choose from through annuity contracts. You had something known as the single premium immediate annuity. This is the vanilla type of annuity. This was the first type of annuity that came out, and what it said was an individual would go to an insurance company and maybe let's say with $100,000, and they would say, "Hey, listen, I don't know how much income to pull out for life. I'm not concerned with this money. What I want to do is have a personal pension plan come to me. I want to have a lifetime income stream come to me on a monthly basis, on an annual basis, year by year by year, and I want to make sure that I cannot outlive this money." So the way that you have to look at this very generic type of annuity is it's the opposite of life insurance. Life insurance protects somebody from dying too soon. It protects their loved ones from dying too soon. An annuity contract protects an individual from living too long because it sets up that specific contractual guaranteed income. Now, if you're going and you're saying, okay, this one advisor was talking to me about this one single premium immediate annuity, if they're only speaking about one company, one solution, that's not going to be the best possible scenario for you. You have to ask them, say, okay, I understand the benefits, the pros and cons of a single premium immediate annuity. What exactly, what companies did you actually go through? Was it just one? Do you just feel favorable towards one company? Or are they just getting paid a higher commission because of that one company? And you have to really do your due diligence and understand that you hold your power at the end of the day. If you have company A that could pay you $6,000 a year, or company B that could pay you $7,500 a year, well, obviously you want to be introduced to company B so that you could place the smallest amount of dollars possible to get the most optimal result. And that works with any sort of annuity contract. The next type of annuities are fixed annuities. Fixed annuities have a fixed percentage rate. It has a fixed duration of time. It kind of works like a bank CD or like a treasury bond. They're very safe type of contracts that are owned by insurance companies. And what they would say is with the same scenario, $100,000. They might say, okay, this $100,000, you could buy a 5-year fixed annuity for maybe that will pay you 3% fixed year by year by year. Well, rather than just finding the company up the street or the advisor up the street, you want to make sure that if it's a good company, it's a good rated company, if it's a very safe company, why would you go with the company that would pay you 3% per year if you could go with a company with all the same tangibles and variables that will pay you 5% per year? And what's happening is you're just leveraging your dollars in a much better route. The next opportunity would be like an index annuity, which kind of acts like a fixed annuity, except for you're not guaranteed a set interest rate year by year. You're only guaranteed that your floor would be 0%, that if the market crashes, it's tied to an upward market stock index. So maybe the product that you go into, let me just pull open a new screen, like that same $100,000 example, instead of a fixed annuity that's going to just pay you a set fixed interest rate 3% every year, a fixed index annuity will pay you based upon if that specific stock market index, let's say you use S&P 500 and the S&P 500 has a 10% cap. Well, if the market gains 12% that year, your account's going to gain 10%. If the market loses 12% the next year, well, then you're going to gain 0%. So you have a floor of 0%, understanding that your principal will be preserved and protected every year, but it will allow you to get those upward market movements, hence beating out the pace of inflation. When you compare the two scenarios, if you had a 10% gain one year, that would have taken over 3 years of a fixed annuity just to result in that 1 year of gain. So that's kind of the power behind it. But once again, you do not want to go into just one company, one solution. You want to understand certain variables. If you have a company that's paying you, that gives you a 10% cap, or you have another company that gives you a 2% cap, obviously you don't want to go with that company that's giving you a 2% cap, because you have your floor 0% and then you'd only be able to gain 2% in a given year. You're better off just going with a fixed annuity. And then you also have the very last type that I was talking about, is the hybrid annuity. There's no reason to just go to XYZ company if your hybrid annuity has very low caps and has a very small income rider. If all the other variables match up identical to companies and their general books, everything matches up to a T with their surplus capital, with their reserve ratios, all these different things, why exactly would you go with a company that could produce a lifetime income stream or produce very favorable cap rates of, let's say this one produced $10,000 per year, or company B produces $15,000 per year? Why would you want to just say, okay, I'm just going to, basically throw darts at a dartboard? No. The point that I'm trying to make is, you want to make sure when you're looking at your best possible annuity plan, first off, you want to make sure that an annuity is going to be correct for your situation. There's many times that annuities do not work for an individual situation. On top of that, how exactly do you get from point A to point B successfully? Understanding what area you live in, what state you live in, how much money you're looking to place into this product, what is your ultimate income goal? Because these little variables are the things that you have to put into a formula, or that we specialize in placing into a formula, making sure that with each individual that calls us up, we go through over 1,200 different scenarios, making sure that they're getting the most optimal result. We're also an independent agency, meaning that we have access to every single carrier in that specific area and every single niche strategy pertaining to that specific age. If an individual is age 45, well, that's going to be a lot different plan than somebody that's age 72, or an individual that's age 60 is going to be a lot different than an individual that's age 62. Even though they're so close in age, there's so many different nuances that you have to make sure is tweaked precisely. And this is one of the reasons why we have a lot of national recognition, is why a lot of people have faith in my company. It's because of the way that we do our due diligence, the way that we educate. We make sure that when you call in, you're very comfortable. We try to help you, explain what your goals are, see exactly if it's attainable to accomplish those goals. If what you're currently doing is the correct path, we're going to tell you this is the correct path. We are A+ rated on the Better Business Bureau. We've always had really good reviews, and it's because of our methodical process. I want to thank you very much. Once again, my name is Derek Afasi. I'm the owner of Afasi Financial Group. I want to thank you very much for watching this video. Please subscribe to our YouTube channel, Retire Sharp, so that you could have access to the most updated videos. And thank you so much for watching. Thank you so much for subscribing. And I greatly appreciate it. I'll make sure to keep providing you guys some really good content. Thank you so much.